Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the 1 hour time frame with the bullish but eventually bearish scenario. Here we are looking for a finished wave 1 or a 3-wave corrective structure, a WXY in a wave 2 or B, and then look for another move towards the downside in a wave C or a wave 3, taking out the low here made at 55.5k. Currently, we are then working on this wave 2 or wave B. Inside wave 2 or B, we then have a complex sideways corrective structure, a WXY. This is a sideways WXY double combo. Zigzag structure in W, complex structure in X, and then a flat structure in a wave Y. Most common target for a wave B in a flat is between the 1.236 and the 1.38 Fibonacci, taken from the start to the end of wave A. The minimum target for your wave C is taking out the high here of your wave A at 59.8k. Above this high, however, we do have some more additional resistance, the blue box here between 61.4k and 62.1k. What we don't like to see is this move taking too long. You can see a vertical line on the chart, the 2 fib time. This fib time is taken from the start of wave A to the end of wave B. Wave C should not be twice the length of A plus B in time. If so, it significantly reduces the probabilities we're looking for a wave C. Most commonly, wave C in a flat structure, 3 wave A, 3 wave B, 5 wave C, tends to be a quick, snappy move on volume, moving above that wave A, then look for weakness at resistance and a move towards the downside. Currently, the invalidation for this scenario is price moving below this low at 56.1k because wave C has to be an impulsive structure, 1, 2, 3, 4, 5 wave move. If we then zoom in to that wave C and we go to the 15-minute time frame, then this is what you would be looking for. A wave 1, a long sideways 3 wave 2. Now you can see that this wave 2 is very long, and as mentioned in previous content, we have to therefore also consider, of course, a wave A, B, C with a long sideways B. But what is more interesting is to look at where price is at the moment, because for the bulls, what you want to see would be a wave 1, 2, 3, 4, 5, and inside this wave 3 we can count an internal low time frame 1, 2, 3, 4, 5. So we can count an impulse to the upside over here. We also have the highest amount of volume inside wave 3, so that works perfectly fine. But that means that now we are looking for a wave of 4. The common target for your wave 4 is between the 236 and the 0.5 Fibonacci, which is taken from the low here of your wave 2 to the high of your wave 3, giving you a target between 58k and 57.3k. The invalidation for your wave 4 is the 0.618 at 57k. The moment price hits the 0.618, we cannot look for a wave 1, 2, 3, 4, 5 anymore. The only bullish scenario that in that case would be left would be a wave 1, 2, 1, 2, then get a bigger 3, 4, 5, 4, 5, meaning you have a double 1, 2. The reason, however, that a double 1, 2 does not have higher probabilities compared to labeling this an ABC if price hits the 0.618 at 57k is because the second wave 1 in a double 1, 2, 1, 2, 1, 2 continuation is longer in time and price compared to the first wave 1 over here. This is your first wave 1, and let me remove this for clarity. This is then your second wave 1. But a second wave 1 should be a lower degree Elliott wave count, and preferably is a little bit shorter in time and price, which is not the case. So therefore, if price does hit the 0.618, bearish probabilities do increase. Now currently we have a move to the downside. We want price to, of course, stabilize, start moving towards the upside with some local bullish CVDs here. An important area of support is the previous range. A wave of 4 of a higher degree, which is the wide wave 4, tends to retrace to the price action of a wave 4 of a lower degree. And this range over here is your wave 4 of a lower degree, because inside this wave 3 we then have 1, 2, 3, 4, 5 as mentioned before. So the price action here is important support and also in confluence with the 0.5. After a 4, we want to see a wave 5 towards the upside, and of course we do like to see this high taken here at 59.8k. Now in the bearish scenario, we are looking for an impulse to the downside. 1, 2, 3, 4, 5, and then in this case we have a wave A, B and a wave C. Now the confluence between the two scenarios is easy. In both cases, we're looking for price to sooner or later take out the low, but this is a more direct approach. In the more bullish scenario, quote unquote, we're looking for price to take the high and then come down at a later stage. Here, we're looking for price to move towards the downside more directly. 5-wave move down, 3-wave structure up, and then continue impulsive behavior to the downside. Now in this particular case, what you like to see is price moving down to the 0.618 at 57k. As mentioned, the moment this hits, the probabilities increase that this is a 3-wave structure, and therefore the probabilities are higher to take out the low. An ABC will have higher probabilities than a 112 as just explained. The common target for a wave 2 is the 618 to the 786 here on my chart, taken from the high to the low of your wave of 5, as you can see at the moment respected. The moment price moves up and hits the 886 at 59.3k, the probabilities increase to take out the high. What you can also see is the 1.618 here on my chart, and that is a trend-based fib extension taken from the start to the end of A to the end of wave B. The 1.618 is generally a minimum target for wave 3 and the impulse 1, 2, 3, 4, 5, so we like to see it hit. But for a wave C, the 1.618 is also still a target. Maybe a little less common compared to a wave 3, but it is still a target nonetheless. So that is why we have to keep in mind this more bearish scenario. But of course, it becomes more interesting if we actually hit the 0.618. Now then I have two alternative scenarios which both have lower probabilities compared to the two scenarios I have just explained, but it is good to know about. So first of all, a finished A, B, C zigzag to the downside. In this particular case, we did not reach the common target area for wave C. We only hit rare targets for wave C, lowering the probabilities for this scenario. And then we have a diagonal to the downside, a 5-wave structure, 1, 2, 3, 4, 5. However, this scenario cannot work because wave 5 is longer than wave 3 in price, and wave 1 is also longer than wave 3 in price, and wave 3 is not allowed to be the shortest wave. You can see over here that wave 5 wicked below the 1-to-1 trend-based fib extension taken from the start to the end of 3 to the end of your wave 4. This then leads me to the probabilities of the different scenarios, and you can see the general theme here. Generally, probabilities are higher to still take out the local low that we made here at 55.5k. To the downside, we do have some additional support sitting between 55.3k and 54.6k, and even lower here, 53k to 52.3k. If price hits the 0.618 here at 57k, then the probabilities increase to move to the downside directly. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.